Good afternoon. Welcome to another Wall Street Wednesday. Today is March 3rd, 2021. And as usual, I'll wait for some people to join. While I'm waiting for people to join in, let me just put out here, I'm going to say it a couple of times, my disclaimer. And basically my disclaimer is this, and that is that what you're listening to are my opinions and thoughts. Anyone that comes on to the show while I'm talking and talks about individual stocks or securities is also giving you their opinion and their thought. I repeat, you should not go out and buy any of these stocks based upon what I'm saying, anyone else is saying. Do your research, do your homework. My attorney has told me that to make sure that I'm saying that. And again, I'm giving you my I'm giving you my opinion, and that's what you should take it for, your opinion. Do your research, speak to your financial advisor. But these, again, are my opinions and also the opinions of the people that are joining us. So that's my disclaimer. Welcome, welcome, welcome. Mike Reed, what's up? I see Christian. What's going on, Christian? So welcome, all you guys. I'm not sure who the other person is. If I knew who you were, I don't recognize your handle. I'd holler at you, but I don't recognize your handle. Hopefully you guys had a good day. Christian, pretty volatile day, huh? Up, down, all around. Actually, not even up, all down. I think, like most people, when I look at my screen, my actual positions as well as the stocks I'm watching to invest or trade, my screen everything was red. So that happens. And I'll talk about it, my opinion in terms of where the market is. I do not repeat, which I'll say again, I do not think that we are in a bear market right now. I think there's some repositioning. I think there's profit taking. In fact, looking at some of the indicators I look at, it looks like that we're slightly or close to being oversold. But right now we're in the middle of no man's land. And what I mean by that is no clear indication that it's a bottom, no clear indication that we bottomed out or we're going up. We're kind of like stuck in the middle. And for me, when I get stuck in the middle, the first place I go to is cash. Cash is king. You cannot lose money in cash. So for those of you who, again, have to trade, I understand. It's what you do for a living, handle your business. But for those of you that are trading and actually trying to put some money in your pocket, if you're not sure, if you're in doubt, if you're confused, you do not have to trade. Move to the sidelines and wait. I have particular strategies that I follow and I use. And when I can't find anything to trade under those particular strategies, I basically move to the sidelines and wait. So I'm going to talk about that in a little more detail. Stephen, how are you, Stephen? Good to see you. Let's see who else I have here. Brian, what's going on? So welcome, guys. I'm just giving a little background information. Also I gave my disclaimer. So I'm just going to give it a few more minutes. I see people still kind of coming in. You know, the excitement's not there right now because nothing's major going on. In fact, you're probably in a bad mood. Ham, what's going on? FVRR had is doing a secondary. That's what I was going to tell you. FVR is doing a secondary. That's why the stock's under pressure. And from there, we'll have to see what goes on from there. But it is doing a secondary. I believe it's actually tonight for tomorrow night. I'll check on that later, but I'm almost positive it's FVRR is doing the secondary. Yep, been volatile. Lots of trimming at the shop. Yeah, it's volatile. So Ham, I don't know if this FVRR, I don't think the secondary came yet. I could be wrong. So what you're seeing right now, for those who don't understand, the symbol's FVRR. FVRR, one of the people that comes on the call, and he works for a firm, wrote a research report on it, been following the stocks, done extremely well. Now, one of the things that we talk about, yeah, just don't tell the WSB crowd. One of the things that we talk about is that when the company's about to do a secondary stock offering, and FVRR announced a secondary stock offering. I don't remember the size of the offering, but they announced it. And once they announced it, it wasn't overnight, so it came, a couple of days. It hasn't come yet. They announced it, and you can see the stock is off. The stock closed yesterday at 280. And today it closed at 242, so you're basically off, almost 40 points. And that's basically that the investment bankers position themselves to bring the secondary to the market. What's going on, Hi? So with all that said, A lot of money, a lot of pressure on the stock. It's been trading extremely well. And by the way, if you were running this company and you needed cash, this is the perfect time to raise cash. Again, if you were running this company and you needed to raise cash, what a perfect time to raise cash. There seems to be a high demand for the stock. People seem to want it. It's trading well. In fact, management might even think the stock's a little bit on the expensive side, but a perfect time to raise capital. All right, I need to touch on a couple of things, so bear with me here. First and foremost, yesterday I put out, excuse me, got a little itch. Yesterday I put out a little chart, and I went long. Notice I didn't tell anybody else to buy it. Recommendations, I don't make them. I went long Rocket Mortgage. Now, for those who don't know, earlier, a couple months back, I was talking about how with the pandemic hitting, with people working from home, with lower interest rates, I would see, we're seeing a demand and rise in buying homes, home purchase. People moving out of the cities into suburbs, since people working from home looking for bigger rooms, bigger places. What's going on, Paul? So we saw a lot of that going on. So at that time, I said, look, if we're forward thinking, the place you might want to look is Rocket Mortgage. Rocket just came public, doing extremely well. And then last week, I happened to look, and I've been watching. Rocket Mortgage, as well as a couple other IPOs, have a large short position. Based on the fact of having a large short position, and this being a recent IPO trading near ties, when I saw the volume kick in, I said to myself, looks like volume kicked in. We got this large short position, which I believe would take 6 or 7 days to cover, was the short ratio, and that's why I went long. Now, for me, I am actually trying to develop a new trading strategy based upon this. One is I got in early enough, but two is I took a small position. I wasn't sure if there'd be any follow through. I wasn't sure what to expect from this. So I got in, brought some small position. In fact, the amount I purchased was an amount that was, if I had lost all the money, if that stock had gone to zero, I wouldn't have batted an eye. Again, one of the things that for me in developing a new trading strategy, or developing any trading strategy, is that you got to test it actually in the market. It might look good on paper, it might look good when you back test it, but when you actually put your money in there is when you really feel and see how it's going to work. That's why I took a small position. I end up closing out today at a couple of dollars gain. When I say a couple of dollars, I mean literally a couple of dollars, single digits. I saw it run up to 42, and I just watched it. The key here was two things. And by the way, one of our listeners, one of my other former students, when I posted that, also told me, he said, well, I went long in the calls, he said, a couple of days ago. So what did I look for? I looked at a couple of things. One is I looked at the size of the short position, and two, I looked at volume, and I watched price. So what happened was the day it broke out that morning, markets opened a half hour, and the stock's already traded its average daily volume and pushed through to its all-time high at the time, which was 34. It pulled back a little bit. I picked up stock, I think it was at 29, 30 bucks a share. I picked up some stock. And then it ran up to 42. But again, just so you guys know, a couple things I looked at. One, the amount of stock that was short. Not percentage of float, but just the number of days it would take to actually cover that if they had to buy it. First thing I looked at. Two, in terms of me monitoring it, I monitored the volume and then I looked at price. But the most important thing that really came up on my radar was the volume. So those are two things I would mention. Now, along those lines, I mentioned two other stocks that have a big short position that were recent public offerings are trading near their high. And that was PubM, P-U-B-M, and the other one was ASO, which was the sporting goods chain that's, I believe, out of the Southwest. But again, those two have big short positions as well as trading at or near their all-time high. Now, PubM, I saw pull back today. ASO held up. But those are two of the stocks that meet the criteria. So that's, again, what I'm looking at. And I always say this to you guys. Volume and price are the two things I look at. Now, right now in this market environment, I know that a number of you have been told to buy on the dips. Whatever it is, buy the dips, just buy the dips. It always comes back, buy the dips. My strategies have never been buy the dips. My strategy has always been based upon price and volume. It's just that simple for me. And most of the stocks that I end up buying, G2, I just was talking about your option trade. So you came in late, but I was just talking about your option trade in Rocket. So there he is, guys. G2 was the one that had actually purchased options. G2, I was just basically telling how you were much smarter than me because you got in before I did. So anyway, my strategy is based on price and volume. And as I've always said in this to you guys, I always look for stocks that are breaking out to new highs. Now, why am I telling you that now? Well, if you look at, if you do any type of tracking and follow the market at all, you know that over the past week, very few stocks have actually set new highs. And the ones that did go to new highs were basically doing off of no volume, slight volume, and they didn't hold. So my strategy of buying stocks when they break out and go to new highs, right now, I can't find anything to buy. And I kind of stumbled into this because when I look to buy stocks that are trading at new highs, if they're not trading well or they're not going to new highs, it kind of tells me that the market's pulling back. And I've been fortunate enough that because of that strategy, I've managed to always be on the sidelines when there's been big market corrections. And it's not because I'm saying there's a big market correction. It's because I can't find anything to buy. You're seeing the same thing in the earnings stories. Even the companies that are beating earnings better than expected, they might have a little pop, but then there's not much follow through. It seems like the only thing that really seems to be following through right now is the short ideas. Now, I know that some of you read like I read and read that the first, let me get myself right. This first month of the year, the first 2 months of the year have been the first quarter, it said. Actually, first quarter, the article said. This has been the worst performance for shorts since they kept stats this first quarter. And as you know, the first quarter is not even over yet. So if you're shorting stock, and that's one of the things that happened to me. I've seen some stocks that are broken down that I think are ready to be shorted. But I got to be honest with you. The fear of being squeezed on the shorts has kept me to the sidelines. Really has. These short squeezes are coming. So one of the things I look at on some of these stocks is how much is actually short and what's going on with the position. Now, with that said, let me just add one other thing. Oscar Health came public today. Big IPO put out by Goldman Sachs. Oscar Health was, they increased the size and they priced it at $39 a share. Oscar Health opened up at $36 a share. All right. Opened up at 36. I'm not sure where it closed. I'm pulling up a chart now. Stock closed at, closed at $34.62, basically just off the low. And it looks like, give you the actual number just so you know. And it traded, 19 million shares a day, which was, believe it or not, on the size of the offering, was not a lot of stock. Couple things I'm going to say to you guys. One, you know already, I would look to short this stock. All right, real simple. I'm looking to short this stock. I'll check and see if there's any options available starting tomorrow, and see how soon we can get they get options on this. But I definitely would look to play this to the short side, and it's easy right now. If the stock runs through 39, which is basically 5 points, 4 points from now. If it runs through 39, I'd cover my short. But I don't think you're going to get through 39. When you have an IPO that comes public and the first day it opens up and gaps down several points like that, usually it's not going to fare very well. Now, the other one I'm looking for is that it? I'm looking for the symbol. All right. There it is. Sorry about that, guys. I'm just looking to see how this one traded. Interesting. All right, the other one I'm looking at right now, Signified Health. Signified Health was another hot IPO that came public about a month ago. And I'm looking at it now, and basically right now, Signified Health is trading at its all-time lows. So it's pulled back. So again, this is what we're seeing, guys. So I would just, like I said, that's my short idea. Now, with that said, a couple other things to talk about. And this one's pretty interesting. I'm going to read my commodities recommendation list. A couple of these, as you know, when I read my commodities list, I'm talking about things that have fundamentally giving you a long or short. Well, some of these, as I went through them and go through them, some of these have actually already started to give me my second signal. So in other words, the fundamentals might be telling me it's a buy, or excuse me, a long or a short. And I'm saying that on some of these, the technicals are coming right along with it. So let me read you my list first. Let me leave you the long side. Long, gas, gasoline, what else? Feeder cattle, gold, and I'm out of order, pesos. Now the last one I'm going to give you for the long side has actually started to confirm itself. It's pretty interesting. It started to confirm itself. I talked about it last week, and we're seeing it, and that's the U.S. dollar. The dollar's starting to strengthen, bounce. The dollar has moved above its 10-day moving average. That's what I was looking for. How much we're going to get in it, I don't know, but that's what I was looking for on the dollar. So the dollar both is giving you both a technical and fundamental buy. Technicals giving you a buy. Fundamentals have been giving me a buy. On the short side, there are a number of commodities that are confirming being short. Now, it could be a combination of a couple of things. And one of the combinations it could be is, believe it or not, is a stronger dollar. A stronger dollar actually hurts commodities. And the reason being is it doesn't hurt us, but it does hurt foreign buyers who come into our marketplace to buy. So as the dollar strengthens, believe it or not, our commodities get more expensive. All right. On the short side, fundamentally, lean hogs, live cattle, high-grade copper. Those are shorts, fundamental shorts, but they have not started to deteriorate. They have not broken down at all. Technically, there's nothing here other than what I'm telling you fundamentally. The ones that have actually started to break down, which means that they're giving you a fundamental short, and technically they're starting to move down, which means they broke that 10-day support, and they're looking lower. By the way, just before as we go, I got to say it, Snowflake missed on the earnings, missed by 26 cents. I interrupted my own conversation to pull up the stock. Bear with me 1 second. So Snowflake closed down 23, and after the earnings now it's down another 5-6 points. So we'll see. I'm not sure what Wall Street was expecting. I'm not in the stock anymore, but I'll get there. All right, let me get back to commodities. Sorry about that. Christian, let me get back. I'll check on silver in a minute. Now, my list of shorts that have technically started to break down. So fundamentally, technically breaking down. Corn, soybean, wheat. So any of the soybeans, the soybean oil, the soybean meal, the beans, any of the wheats, they're all breaking down. What else? Natural gas. Natural gas is also breaking down. These are all, again, shorts that are technically and fundamentally breaking down. All right, what else? Cotton, coffee, sugar. Now in the currencies, the British pound, the Aussie dollar, and the New Zealand dollar. Those three currencies have actually started to break down. Now, I'm not saying that they're breaking down in terms of just going out of business, that time of breakdown. I'm just saying fundamentally they're breaking down. And again, based upon my strategies in the commodities market, that means I'm looking for a reversal. All right. Now, my last one, I had a question on silver. So give me a second. Let me pull up the silver futures and actually do a quick check on silver. Let's see. Full contract. All right. Whew. I got that one there. Bear with me a second. Let me just check another place here. All right. Silver. Wow. All right. Silver's in no man's land. When I'm talking about commitment to trade report, I'm getting a nowhere. The shorts and longs are about the same position. In fact, so no real buy or sell based on that. Now I'm looking at the chart, and as I tell you guys all the time, I usually switch to a weekly chart to take out the volatility and see what's going on. And, Looks like silver actually had a reversal. Looks like silver now is actually looking to reverse again. So silver looks like it's in a downward trend. I'm going to go to a day chart. Downward trend. We're right here at support, which is at the $26 level. And if it breaks below the 26, your next support is going to trade between 26 and 24. As I always say, the trend is your friend, blah, blah, blah. Being short silver right now is probably not a bad position to be in. I don't think it'll bounce off support, but it looks like, again, silver's at the bottom of a trading range. It breaks the 26 trading range. You're looking at the next stop would be down here at the 25 and 24 and change, 24 and a half, 24. 24 and a half, that would be the range. So that's what I see. All right, so I'm gonna get back to this. All right, so once again, these are my thoughts, my opinions. If you're going to trade any of the commodities, make sure you speak to your commodities broker. These are my opinions, my thoughts, as well as it might have worked out for me. I am not telling you to buy these. I'm just telling you what I see and what I think. What's the saying? That and 25 cents will buy you a cup of coffee. Well, your generation, 25 cents doesn't buy much. I don't know what it buys. Not even a piece of bubble gum out the gum machine. All right, let's see. So those are the things I wanted to cover today. Now, I need to discuss this. Not everyone, so let me back up. Right now, we're seeing all this news coming out about Robinhood, about Reddit, about the short squeezes, about them running things up, running things down. And last week I had told you guys, if I were the owners and founder of Robinhood, I'd have stopped trading in those GameStop as well. All right, let me explain something to you guys. Not everyone knows this. I know a lot of you do, but I also have some newbies here. When you buy on margin, and by the way, the only way you can short a stock is on margin. What that means is that you put up money and the brokerage firm is going to loan you some money. All right. When you put up money and you're borrowing money from the brokerage firm, if that trade starts to go against you, all right, and typically a trade going against you goes against you, if it goes down enough, you're going to get what's called a margin call. A margin call is nothing more than you don't have enough skin in the game. You don't have enough equity in here, so we want you to put more money in. Now, most margin calls come about on a 15% move, right around 15%. I don't want to bother you guys with the formula. Most of you know it, but just know this: if you're in a stock and it moves 15% against you and you're on margin, most likely you're either going to or you're right at a margin call. For those who don't know what a margin call is, it again means the brokerage firm's calling you and saying, you got three options, Mr. Milligan. Put up more money, bring your equity back to 50%, close out the position or part of the position to bring your equity again to 50%, or Mr. Milligan, do nothing and we'll execute the trade for you in 3 days if nothing's done. Now follow me what's going on here and why I bring this up. You are long GameStop at 100. Let's easy number. And you're long GameStop at 100, and the stock goes to 115, a 15% move. I need you all to realize that all those hedge fund managers or anyone that was short GameStop stock got a margin call. All right? And that margin call basically said to them, you need to bring your equity back up to 50%, which means pretty much put in the money that you lost. So if you lost $15, put in $15 to bring your equity back to 50%. All right? Now, typically when that happens, the brokerage firm will call you and they'll give you T+2. I believe it's T+2, trade day +2 to actually put more money in the account. I could be wrong. It could be trade +3. You guys will correct me. I haven't had a margin call in a long time. I haven't. But anyway, so it goes up that 50%. You got to put the money in. Now follow me. That usually happens in one day, and you have 2 or 3 days to get the money in. But let's say that stock moved up 15%, and then it moved up another 15%. So it went from 115, and I'm doing some simple math, to 131, to 147, all right, to 160. Each one of those moves of 15% in the same day created another margin call. So by the end of the day, if that stock had gone from 100 to 200, those hedge funds had to put up almost the exact same amount of money they put in to get that position. In other words, the stock doubled. They got to, trust me, when the stock went up 50%, they got a margin call. All right? When the stock went up 50%, they lost half their money. When the stock goes up 100%, they end up owing money to the brokerage firm. This is the reason why, if you don't know what you're doing, don't short a stock. If you don't know what you're doing, don't short a stock. And that's the other reason why, if you do know what you're doing and you do get a margin call, don't cover it. Close out your margin call. Close it out. Don't keep adding money to it. You were wrong. Your timing was wrong. You were wrong. And this can become a very bottomless pit. Now, if you're long the stock and you get on margin, this happens, the most you can lose is the stock goes to zero. If you're short the stock, your loss could be unlimited because the stock, in essence, like you saw in GameStop, it went from, what, $8 a share, $10, $20 a share to 400. All right, you have unlimited upside loss potential when you short a stock on margin. All right, that's the reason why GameStop was so worried that you couldn't meet the margin call when this thing moved. Again, think about it. It generated several margin calls in the same day. Now, the commodities market doesn't do this. And the reason being is the commodities market, and those of you who have a commodities account will know this. Those who don't, listen closely. Read the fine print. The commodities market, your commodities firm, when you trade your commodities, it says in the customer agreement that they can and do have the right to close out any position that you're in. And what that means is for them is if they see or feel risk is coming on, like we saw in GameStop, if they see that happen in the commodities market and you're getting a margin call and they're worried that this margin call, you can't meet it, or the margin call could be more than what the account's worth and they can't get you on the phone, they're going to close you out. That's happened to me. All right, they're going to close you out. And two things. One, I was thankful that they did, because had they not closed me out, I would have actually I would have lost the money I invested and still owed the brokerage firm money. So I was glad they closed me out. Two, that's the reason why I tell you don't add good money to bad. When these things are going against you, close out, move to the sideline, and wait. Close out, move to the sideline, and wait. So I wanted to make sure that we all understood exactly what happens when you're shorting a stock and why these guys got squeezed. They got squeezed because they had to put more money in. So again, this is my fund. I'm telling these guys, close the position out. If your position is so large that you can't sell at all, you can also always become what we call delta neutral. Delta neutral means going to the options market, and basically, if you're short, buy calls. If you're long, buy puts. Take yourself to what we call delta neutral, and that way you can move out. All right, I know I said a lot, especially if I have some newbies in here, but again, if you take time, listen to this a couple of times, digest it, understand why you have to be careful going long and shorting. All right, that's pretty much what I wanted to hit you guys with. That's everything I had to talk about. Anybody want me to look at any question? I should say any question before I go. I'm not go, but any questions? I answered that one on silver. All right, cool. Any questions? Anything going on? Yeah, so that's what's going on. Again, my disclaimer, talk to your broker. I'm not making any recommendations. These are just my thoughts, my opinions, my comments. Please talk to your broker. All right, the other thing, I do not believe that we're in a bear market. I do not believe in buying the dips, but I do not believe we're in a bear market. All right, with all that said, the other thing too is my IPO market has really dried up. There is another deal coming tonight, looking pretty hot. I can't remember what it was. Let's see if there's some follow through. But there is a deal. In fact, tonight, I can't remember what it was. Geez, don't get old. And the other thing is, just go back. I'm sorry, I'm just checking on the stock price. Yeah, so aftermarket trading, Snowflake is actually down another 11 points. It was down 5 when the news came out. Now it's down 11. So basically, the stock is down 33 points for the day, and not going. Yeah, buy the dips, but they keep dipping. Yeah, that's the reason why I don't buy dips. I buy new highs, and hopefully they follow through. But I don't buy dips. You know, there's a saying on Wall Street: the dear get dearer, and the cheap get cheaper. So that's not a big one for me. I'm also checking out Rocket Mortgage, and Rocket Mortgage is interesting, guys, because it's actually a legitimate company. It really is a legitimate company. They had a great quarter, great earnings. You saw the squeeze come in and push it to new highs and then pull back. I do not, again, now Rocket Mortgage might be caught in and get whipsawed around a little bit here, but this is a fundamentally valued company. And I know one of the firms came out today and put a value on it and said that they thought it was worth $30 a share, one of the firms I follow it. So no big surprise. Who was it? It was RBC Capital. They came out and said that the stock is worth $30 a share today. It pulled back. Again, legitimate business, legitimate company. Without the shorts in here were basically just betting that it would not go up. The shorts were betting that they would have a hard time because of rising interest rates. They got short the stock. Rising interest rates mean less mortgage, less buyers, so that's why they got short on the fundamental tip. All right, I've been asked about AMC. I haven't looked at AMC in a while. And the reason why I haven't looked at AMC was that AMCX is the one, I believe, right? Is that the other one? Yeah. But AMC, I'm looking at the stock now. It's trading at $8, $8.50. It's pulled back. It's had a little bounce here off of some volume. They have earnings due out. Again, I would not invest in this stock at all. If you're going to trade it, trade it. And what I mean by trade it is buy it. Look, buy it or short it. Go long or go short. Look for your profit. Take it. Move quickly. If you see the volume kick in and stock start to run, which it did a couple of back in mid-February. I'll give you the exact date. Hold on a second. Back in mid-February, February 22nd, volume kicked up, and the stock basically went from $6.5 to a high of $9. I'm telling you guys, you got to keep an eye on volume. You just got to keep an eye on volume. And if you're trying to play this short squeeze game, which I have no problem with you trading that if that's what you want to do, you definitely want to keep an eye on volume. Two things you want to look at: volume and the short interest ratio. Short interest ratio, I would look at a ratio of 4 or 5 days or more, 6 days. There's a couple of them out there with 10 to 14 days. That means it's going to take that many days of volume to cover it. I would look at those, and I would also look at those and put them with the volume. As I told you guys, I have a stock watch on my system, and I just created a new stock watch. I'm going to it now. And the reason why I'm going to it now is you'll love the name. And what it is it's a stock watch. I call it my short squeeze. It's all the stocks that have a couple things. They all have high short ratios. They also have high short ratios. And these are stocks I'm tracking that I believe could possibly be a squeeze. Let's see. Do I see electric vehicles charging company stocks? I got to read this again. Professor, do you see electric vehicles charging company stock going up since most companies are going electric? I think you're asking me about, correct me if I'm wrong, I think you're asking about the actual battery companies. Do I see electric vehicles charging companies? So the companies that basically charge electric car. And the answer is yes. So let me explain what I mean by that. None of these automobile manufacturers, electric automobile manufacturers, are in the bubble. And what I mean by that is they have to buy raw materials and supplies to actually make the vehicles. All right. So if you're going to see an increase in electric vehicle sales, then the next question is, who are supplying the necessary things for these electric vehicles? And case in point, one that we've already talked about is the battery. The battery, also the chips that are going in there. And you guys know that the chips have to actually be video chips. So those are companies I look for that could end up dominating that market. Now, as we said earlier, the chip manufacturers are under pressure right now, like a lot of the tech stocks. But I would look for the companies that supply. One of the things, I'm sorry, I'm reading too late. One of the things that I always tell people, which I'm telling you guys, is no company's in a bubble. They all buy supplies from someone else, manufacture their product, and then sell it to someone else. If you're fortunate enough, you can find a supplier that is going to have a bigger impact than the actual company itself. So let me explain what I mean by that. There was a little small $3 or $4 stock that 2 weeks ago exploded, and I can't remember. I think it was Amazon. They signed an agreement with Amazon to provide them with a certain technology, and the stock just exploded. It looked like a short squeeze because of that. Because they knew that Amazon signed an agreement with them, how much revenue they're going to probably get, we estimated from that. So all I'm saying to you guys is no company's in a bubble by itself. You want to look at these things, you want to track it, and then you want to see what industries or what companies are going to do well from it. If you're lucky enough, the companies are private, it's going to be public, and there's smaller companies that will have a bigger impact. I've always been a big believer in that. The other thing too to look at is earnings. One of the things that, and I'm going to show you how this works. Every time Apple comes out with a new phone, all right, they've been doing it, it's been going on for years, but I'm going back literally several years. There were engineers that would buy the new phone and take it apart and then tell you who the manufacturers were for every part in that phone, and then proceed to go out and look for stocks to buy or those companies to buy because they looked at that. The manufacturers themselves would not disclose who they're buying or who they're using. These guys would buy the phone, pull it apart, and then look at that and then go from there. So all I'm saying to you is maybe you don't quote unquote buy the electric car, but do your research and find out what supplies and what they're buying and where they're getting it from. You'll see a kick in that. Twin, I'm not familiar with this I'm looking it up now, ROBLOX. And the reason I'm not familiar with it probably is because I don't look too much at those special situations, those special SPACs. I don't look too close. Give me the symbol, I'll take a look at it. It's Buzz. Yeah, Buzz is that new ETF that's come out. I know that I've been hearing about that one. I don't know how, but I end up knowing more about it than I care to know about it. Twin, give me the symbol, I'll take a look at it. Buzz is interesting. As you guys know, Buzz is going to invest, maybe you don't know, Buzz is going to invest in what they call whatever seems to be the hot topic or hot area that people are looking up. In other words, if we're all doing Google search under, I don't know, I'm making something up. If we're doing all Google searches under mortgages, and there's a whole bunch and they're seeing that, then they say there must be a buzz in the mortgage industry. Let's go look at some mortgage stocks. The challenge that you have with Buzz is that Buzz is like a lot of ETFs. One, is not actively traded, and two, Buzz is only going to rebalance, if I heard correctly, rebalance in terms of making decisions in the portfolio once a month. So it's not what you would call a trading vehicle. It's more of a buy and hold vehicle. And again, it's tracking Buzz. You know, without going into too much detail, going back, the key to making money in the market has always, in theory, been about information. And that's what this Buzz is trying to capture on, is information flow. That's all. And for us, for me, information flow, I got it, Twin. Information flow, I follow information flow by time in volume. Twin, it didn't work. I typed it in. It's not coming up. No, I'm not getting anything for RBLX. So I'm not finding anything. Yes, so thank you, Franco. As you guys can see, he was talking about the Buzz. One of the largest names in gaming, talking about metaverse. As you guys know, metaverse is the language used when you do your search engine on the internet. So that's one of the things that they look at, which is cool. Thank you, Franco. It's an IPO, but I believe, Franco, correct me if I'm wrong. It's a ETF IPO. It's not a stock. So everybody's telling me RBLX. I'm not seeing anything on RBLX. Did it just go public today? Is it about to go public? Did it go public? I can't find it. Oh, Franco said that's on RBLX. I can't find it. I think you guys are making it up, man. I really do. I think you're just saying that to screw me up. Oh, my fault. RBLX. RBLX. Whew. That's why. Next week. All right. Next week. All right. Let me see. Do I have this open? If I can find something, I will. Bear with me a second. Bear with me a second. Let me go out here and see what's going on with next week. Bear with me a second. So let me find out about this RBLX. Let me do a quick little check on it. All right, RBLX, huh? All right, sounds like a good... guys, give me 1 second. I'm just pulling up some research. I'm pulling up my IPO research. That's where I'll find it. That's probably why I didn't look at it. All right, well, again, my computer's running slow, probably because I got so much open. RBLX is what you're telling me. All right, let me go find it. Control find. Control find. RBLX. RBLX. All right, let's see that. I see it. Where's the listing? Come on, come on. I found out who the underwriters are. I'm looking, oh, there it is. I just went by it. Bear with me just 1 second. I'll actually read it to you guys so you can see it. Let me just pull it up. So RBLX. All right, can't pull it up. Come on, what's going on with my system? Ah, that's what's going on with my system. There it was. So I apologize, guys. Nope, I can't pull it up. I'll have to look at it later. Sorry about that, guys. I'm not hearing anything on it. Computer Data Services, RBLX. So right now, no read on it. Lead underwriter is Goldman Sachs. Looks like Goldman, right? Yeah, I think it's Goldman. I will take a look at that and get back to you guys. Right now, it won't seem to open up. Where do I go to look? You can go to Renaissance Capital or Renaissance IPO. That's it, Renaissance IPO. The service I'm looking at now, I pay for that service, so I can't give it to you. It's through Triad Security. I can tell you that it's through Triad Security. Some of you guys on the call have been to Triad's office with me, so you've been up there. So that's who that is. And Renaissance Capital also has it. The only challenge with Renaissance Capital, again, it's a paid site. You got to pay for it. But you know what else we can go? Geez, I'm getting old. NASDAQIPO.com. We can go there. And I'm there now. Bear with me a second. And I'm looking for, I can't believe you guys have me looking for this thing. I'm only kidding when I say that. Let's see, RBLX, there's Oscar. So here it is. All right. I'm on NASDAQ site, RBLX. 1 second. 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 1 let's see. Give you some interesting things about it. Let's see what this is, RBLX. Let's see. Lead underwriter again. Oh, there's no lead underwriter, huh? All right, I'm in the table of contents. I apologize, guys. I know this is probably boring for you because I'm flipping through this thing and reading, or trying to read. That's not helping you at all on my call. But let me just go to one thing. I just need to see who this is. Boo, 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 boo. All right, you got some really, you got, who's a Tiger's in here. I'm looking at the VCs and the angels that are actually invested in this thing. Wow. Got some heavy hitters in here. And the businesses with So I'm going to go back, and I do apologize for this because I know it's dragging on a little bit, and you guys don't want me to sit there and read it to you. So here's what I'll do. I will go through and look at this, and I'll put my thoughts down and have it for the next call. I might even type it up and put it on Instagram so you guys can see that. I don't want to sit here all day and just read a prospectus. It's not a fast read. Anyone who's ever read it knows it's not a fast read. All right. Yeah, I will. I promise you, I will post about RB. I'll give you my thoughts on it. RBLX. I will take a look at it. I promise on that. And you know, with me, I got to write it down, so I'm writing it down. RBLX. All right. Any other questions? Any other questions? I have a few more minutes before it's time to hop. Any other questions? And again, I'm back here looking at. No, okay. Looks like everybody's kind of signed off. I don't have any. Bear with me 1 second. Yeah, okay. So yes, I'm gonna hop right now. I'm looking at some stuff. I'm gonna go here and look at this RBLX. I'll put some information out for you guys. I don't have anything else. Stay nimble, stay quick. Again, I'm in all cash. Remember that just because, well, I'm in all cash in terms of my trading. I'm long. I am long my core position. I'm still long, although I'm not sure how long I'll be because I'm heavy tech weighted. Now, the advantage I have is my cost base is extremely low. But right now, the market has not given me a sign that it's time to sell. If anything, the market's like is repositioning, removing cash and repositioning itself. Asset allocation. But I'm going to stay long what I have. All right, guys, have a great one. And I will see you on next Wednesday. And I'm going to go do a little research on this. I'm going to do a little research on this RBLX. And tell you and get down the nitty gritty. As I said, it looks like it's got a real strong VCs involved in it, some real strong investors that are bringing this stock public. So I'm going to do some research and I'll get back with you. All right, have a great week. Stay nimble, and I will talk to you later. Thank you so much.